Good morning, traders. It is April 8th. This is Daniel, and this is the view from my vantage point. I want to take a minute to talk to you about intermarket analysis. Now, when I say intermarket analysis, what I'm talking about is looking at the markets from a global perspective. It's earnings season. Everybody's waiting for the FOMC minutes, and there's so many things going on in the markets right now. I want to show you a way to take all of that information, look at it in one concise way by using mathematical algorithms and artificial intelligence to make your life easier and to make more money. That's why you're trading, to make money, and Vantage Point's intermarket analysis is going to look at the markets from a global perspective and dig into the minute patterns and relationships between the markets. And I'll show you what I mean. I'm going to talk about Alcoa. Alcoa is in the news recently because of their reporting, and I want to show you what Vantage Point forecasted for Alcoa and what's been happening in Alcoa since the forecast. First, let's talk about intermarket analysis in Alcoa. I just went to a tab on the screen called Intermarkets. Now, you know Alcoa is a U.S. company, but it's being influenced by markets around the world, domestically, internationally. Let me show you what I mean. Vantage Point looks at and determines 25 markets that are influencing Alcoa in this case. The 10-year T-note, Arch Coal, Cliffs Natural Resources, right there. You've got a futures market, an interest rate there. You've got two stocks. There's the Dow. You've got the E-mini S&P. These markets, as they move, they push and they pull Alcoa's share price. Well, if you can determine which markets are influencing the share price in Alcoa, well, it just makes sense that if you can turn that into actionable data to tell you what Alcoa is expected to do, you could predict the trend in Alcoa. Well, there's 25 markets here. It's hard enough to find the 25 markets, but Vantage Point is also determining whether they push Alcoa up or whether they pull it down, and to what degree. That's intermarket analysis, and that is patented technology that you can get in Vantage Point. And let me show you why that is important. Okay, all that actionable data is generating some predictive indicators in Vantage Point. There's a blue line that's a predictive indicator. There's a predicted high, a predicted low, and there's this green line that's another predictive indicator. So we're looking at 4 predictive indicators, all generated on this chart from that intermarket analysis. These indicators lead the market. They don't lag the market. So it's going to give you an edge. It's going to give you information you need to make better decisions sooner so you can make more money. All right. The blue line crossed below this black line right here, and that's Vantage Point indicating this trend is expected to go down. This was back in February, about February 10th or so. Now, the first thing you want to do when you see that this is a trend that's moving in a direction that you're going to trade is get confirmation. Vantage Point has now indicated that trend is expected to go down. The first thing you want to do is look down here at this green line. This green line is drawn on the chart. It's an oscillator, and it's drawn after those 25 markets are considered, and it's indicating strength or weakness. It correlates with the 1 and the 0 on the left-hand side of the screen. Now, when it's down in the 0, like it is right here, when that blue line crossed below the black line, that's Vantage Point indicating this trend has some weakness in it. Well, if the blue line is saying this trend is expected to go down and there's some weakness in this market, well, that's an opportunity that you can take to trade this to the short side. If you took a short position on this and you just went crossover to crossover, let me show you how Vantage Point would have helped you profit just in the last couple of months. 15% or more in the last 37 trading days, $2.44 a share to the downside. Now, Alcoa just recently reported. Vantage Point said 3 days ago that this trend is expected to go up. Now, the blue line crossed above the black line. The neural index was at a 1 position. This trend changed direction, and Vantage Point said expects an increase in this share price back on the 2nd of April. That was last week. All right, on Thursday, Vantage Point said this trend is expected to go up, and it has gone up ever since. There was a big gap up today, obviously, because of the earnings, and Alcoa is up around 1356, or it jumped to 1380 this morning. Vantage Point said 3 days ago this trend was expected to go up. If you were using Vantage Point and you had that information, you could have been in position and taken advantage of that pop since Thursday of last week or Friday of that last week. That's how intermarket analysis can help you. That's how intermarket analysis is going to help you make more money, because you're getting an advance notice that the trend is expected to change direction. Lululemon, another one here. I want to show you this because this is obviously trading in a channel. It's clear. You can see it. It's been sideways, but where is that blue line? The blue line's above the black line. Back on March 30th, Vantage Point said that Lululemon is expected to go up. The confirmation was there. You can see that the indicator, the oscillator, or the predicted neural index, we call it, is in a 1 position. Vantage Point is giving you all the green lights and saying that this trend is expected to go up. If you got into position the next day and you were in this position, in the last 5 trading days, you're up $2.80. Before I did this video, I checked Lululemon. It was up 4% today. So you're talking about almost making 7% in 6 trading days because the intermarket analysis. Because the intermarket analysis is generating a forecast. If I go back over here to the market tree and I put in Lululemon and I pull up the intermarkets for Lululemon, you're going to see that they're different. Remember, Alcoa had Cliff and Arch Coal Energy up here in the top. Lululemon has its own intermarkets. Of course, a 10-year T-note is in there. That's an interest rate. It impacts almost all the U.S. markets, if not all of them. Allegiant Technologies, another stock. CF Industries, Chico's, that's a retail store. So you can see that the intermarkets are different. There's 25 of them, depending on which stock or which market you're looking at. And Vantage Point knows, because of those patents and because of those neural networks, whether they're going to push the share price up or the share price down of that target market using this intermarket analysis. I say it again, you're trading in global markets. You have to have a global approach if you want to make the kind of money you want to make, if you want to retire early, if you want to put the kids through college, if you want supplementary income, this is the tool for you.